You did not hear me wrong. We are back in this kind of world of good news is bad news around retail sales. Good afternoon. I hope you are staying dry and warm here in this crazy Pacific Northwest weather. We have some big stuff to cover here this week. Not a lot, but some big stuff. So we have inflation data to catch up on, and then we are back to this kind of good news is bad news type of scenario when it comes to the retail sales numbers that came out here just yesterday. My name is Steele, financial advisor with Mainsail Financial Group, and our goal every Thursday is to bring to you the market news, the data, the trends that we're watching, and hopefully weed out a little bit of the noise along the way. And before we kind of jump into the core of our conversation today, I want to just come back to what I shared a minute ago. You did not hear me wrong. We are back in this kind of world of good news is bad news in the situation that we saw on Wednesday around retail sales. So we will come back to that here in a little bit and start talking in more detail about this relationship that we're seeing between, again, good data points and what it means for the markets. But before we get to that, I do want to touch briefly on the inflation side of things. If you remember, if you tuned in last Thursday, we talked a lot about consumer price index, the CPI inflation data. And that is really maybe the main story of the inflation side of things for last week. But we did get producer price index data on Friday as well. So I wanted to make sure to kind of share a little bit about what we saw on Friday. The PPI producer price index number was down, believe it or not, 0.1%. But the core PPI data point was actually up 0.2%, which was kind of in line with expectations. So for those who follow, I'm sure you've heard this plenty of times at this point, but just to be clear, the headline number, the PPI number, is kind of the overall basket of goods, whereas the core takes out food and energy. So again, the core is the one that really the Fed is mostly focused on because of the volatility around food and energy. And that was in line with expectations. So it's important, but there's nothing really to write home about on this one. Just relevant to make sure that that we're kind of keeping up as far as the inflation data comes. And we do have some more inflation data coming out again next Friday as well. So we have some more inflation numbers to kind of go off up here pretty soon also. Fast forward, we had not just a cold weekend, but a long weekend as well. Some of you may have had this Monday off for the holiday. Markets were closed on Monday as well. So we do have a bit of a shorter week in trading. But we had a very important thing to kind of discuss here this week, as we had very, very strong retail sales numbers come out on Wednesday. Yet, although this would be a good data point, good news, we saw the markets really react poorly to this news. And I think that it is kind of a common theme here over the last 2 years or so that seems to keep kind of rearing its head here. So we'll talk a little bit about that. But I think that basically what we're seeing is when we see these strong data points, what the market is reacting to is concern about what the Fed may do next. So if we look over the last 2 years, we were in this cycle of the Fed raising rates. And really there's 2 points that they look at, right? There's inflation and there is jobs and or the consumer strength, if you want to kind of tie those together. So basically on the jobs and consumer strength side, and inflation is the other side of that. On the jobs and consumer strength side of things, that has been the light in all of this craziness we've been dealing with the last couple of years. Even with all the economic challenges and inflation and interest rates, the labor market and the consumer, based on the data, certainly continues to show strength. And on the inflation side of it, obviously over the last 2 years, we've been dealing with increasing inflation. It has been much more persistent than many expected. We are starting to see signs of it coming down, but it is not gone by any means, and it's still quite a ways above what the Fed suggests is their target. So over the last 2 years, inflation's been the main one to watch. And as inflation kept creeping up or kept staying persistent, we obviously saw the Fed react to that and continue to raise rates. Now, the Fed has all but signaled that they are done raising. And so the question really comes up as twofold again. It's, does inflation come down? And is the labor market and or consumer still strong? So inflation is showing signs of coming down, but again, not to the target. And the other place that the markets are really watching is how the labor market and the consumer reacts to everything going on over the last 2 years. So again, here we are on Wednesday, we get retail sales numbers that were extremely strong, and the market reacted poorly because they are worried that with the strength of the consumer, the Fed may either delay longer when they actually start to cut rates, and or cut rates a little bit at a slower pace instead of going too quickly. So this has been a common theme over the last 2 years. You did not hear me wrong. Again, good news seems to be bad news. And I hope that eventually we will get out of this. But as long as the Fed is the center point of focus, this will continue to be a theme. So that is kind of the world that we live in these days. And it's typically more short-lived over the coming weeks or months. I mean, market's up today. We'll see it kind of shake out, but we certainly see those knee-jerk reactions on good or bad news, depending on what's going on. Now, all that said, what has happened really over the last week or two is markets have pulled back a little bit, but rates have jumped up significantly again. And so I think that a lot of the data that's come out lately between the CPI data last week and this retail sales number this week is basically suggesting that, the Fed is probably not going to cut for a little bit longer than many expected. And the market is certainly taking that into consideration. I think that the market made a little too much of a bet on the flip side, and maybe this is just kind of normalizing to some degree, but that's what we've seen so far into 2024. Last thing I'll touch on here this week is we did also have initial jobless claims come out today. That number was way down here for this week, which is a good thing. That less initial jobless claims is a good thing. It means the labor market is strong, so another point towards that direction as well. We will skip our question of the week here this week because we do have a client town hall event tonight, but be sure to tune in next week. We'll come back to our question. And then we also have a lot to unpack between consumer sentiment, GDP, home sales, and then we'll also, towards the end of the week, we get inflation data and personal income and spending as well, all in the mix. So be sure to tune in next week. We'll see you next Thursday at 3 p.m.